Welcome to the first part of our ultimate video guide to the disability tax credit. Whether you're applying for yourself, a child, or an elderly parent, understanding the rules is the first step to success. This video covers the who and the what. For a more comprehensive look at the fine print, you can read our full guide on our website. The link is in the description. Let's start with the basics. What is the DTC? The Disability Tax Credit, or DTC, is a non-refundable tax credit. That's a fancy way of saying it reduces the amount of income tax you owe to the government. It's designed to help offset the extra costs that come with living with a disability. Crucial point: even if you have no income and don't pay taxes, you should still apply. Why? Because the DTC is the gateway to other major benefits like the RDSP, the Child Disability Benefit, and the Canada Disability Benefit. If you don't have the DTC, you can't get those other payments. Let's look at the numbers for 2026, for example. The base amount. For adults, the federal disability amount is $10,138. The supplemental amount. If the person with the disability is under 18, there is an additional supplement of up to $5,914. When you apply these credits to your tax return, they can result in thousands of dollars in tax savings or refunds every year. To qualify for the DTC in 2026, you must meet 3 strict criteria. Prolonged impairment. Your condition must have lasted or be expected to last for a continuous period of at least 12 months. Severe restriction. You must be markedly restricted in your daily life. Certified. A medical practitioner must certify that your impairment meets the CRA's definitions on Form T2201. This is where most people get confused. Being markedly restricted means that even with therapy, medication, and devices, you are unable to perform a basic activity of daily living, or it takes you 3 times longer than someone of the same age without the impairment. And here's the kicker. This must be the case all or substantially all of the time, which the CRA generally interprets as 90% of the time or more. It's not about your bad days, it's about your everyday reality. The CRA breaks eligibility down into specific categories. For physical impairments, this includes walking. Can you walk 100 meters, 1 city block, without stopping to rest? Dressing and feeding. Can you dress yourself or prepare food independently? Eliminating. Do you have significant issues with bowel or bladder functions? Hearing, speaking, or vision. Are you considered legally blind or severely hearing impaired? Life-sustaining therapy. Do you spend at least 14 hours a week on therapy like dialysis or insulin pumping? For mental and psychological impairments, we look at adaptive functioning. Can you live independently or manage personal hygiene? Memory and problem solving. Can you remember basic info or identify everyday risks? Goal setting and judgment. Can you make decisions about your own welfare or recognize danger? What if you aren't 90% restricted in just one category? You might still qualify under the cumulative effect. If you have significant limitations in 2 or more categories, for example, you move slowly and you have memory issues, the CRA can combine them. If the combined impact is equal to being markedly restricted in one category, you are eligible. This is a vital path for people with complex or multi-layered conditions. If this sounds complicated, that's because it is. Determining if you meet the 3 times longer rule or the cumulative effect is exactly why so many Canadians get denied when they apply on their own. At Disability Credit Canada, we help you determine your eligibility before you even talk to your doctor. We know the 2026 criteria inside and out. We help you frame your daily struggles in the specific language the CRA needs to hear. We take the guesswork out of the application so you don't waste months waiting for a denial letter. Best of all, we offer a free assessment to see if you qualify. That wraps up Module 1. You now know the definitions of severe, prolonged, and markedly restricted. In our next module, we're going to get practical. We'll show you exactly how to fill out Form T2201 and which medical practitioners are allowed to sign off on your application. I'll see you in Module 2.